Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I'm delighted again to be able to speak to Ian Strafford-Taylor, CEO of Equals Group, a leading e-payments, international forex and fintech firm. So a big bonjour and bienvenue, Ian. As I understand, you're in France on the moment on holiday.
I sort of got so nervous about all the various restrictions, I thought, get out of the UK while you can, in case they change the rules again. So yeah, we managed to get away at the last minute. It wasn't really planned. Certainly wasn't planned around a trading statement. But as any of you who know me know, when I'm on holiday, I'm not really. So I'm always working, so to speak.
Yeah, no, it's a massive sort of like above Call of Duty, this one. So we're very grateful. Anyway, big congrats on this morning's excellent half-year trading update with sales up 21% to 16.7 million. If I read it correctly, Q2 is a record, up almost sort of like 50%. And that's despite any meaningful rebound yet in international travel, obviously with the exception of yourself.
No, because technically, Paul, I travelled in H2.
Oh, did you? Oh, okay. Sorry about that. Yes, that's correct. But Des, you could quickly walk us through what's really good. This quite explosive growth you're seeing, despite the travel side.
Yeah, I mean, suffice to say, we're delighted with the performance in the first half, and as you say, the second quarter was a record, and without hardly any travel money at all, revenues, which would have come in ordinarily. So we could have beaten 9 million or something for the second quarter with just a decent amount of that. And as we've said in the statement, it's pretty broad based across the various product streams. But really what you're starting to see come to pass now is this whole concept of equals money, where increasingly it's not just the one thing, or it's not just international payments. I allude in the statement to equal solutions, where it's a kind of the far end of that, where businesses are using us because we have this whole collection of capabilities all wrapped into one thing. So that's the trajectory of growth on that type of stuff, especially, you remember around the Capital Markets Day, we announced the own name multi-currency IBAN product. That's June was a fantastic month. July started well.
That's straight through processing, isn't it?
In effect. But people, we all, I want to wire some money, it goes somewhere, doesn't it? It sounds simple, we don't think about it, but the complexity of payments behind the scenes is not to be underestimated, particularly when you're doing, many thousands of payments in the UK via faster payments or whatever it is that you might be doing. So that investment that we made over the last couple of years, is really getting some traction now. And so we are very positive about the direction of travel for the company. Yeah,
you offer a sort of like a one-stop shop, don't you, for the whole of the sort of the B2B corporate space. And what was quite interesting, which was you seem to have won a mountain of literally thousands of new customers right across the patch, which bodes well for the second half. First of all, why are these customers coming to you? I think I know why, because it's a great service, but can you just explain how you're winning all these new customers? And also it's more sophisticated as well, and they're sort of higher value, more medium sized rather than small sized.
Yeah, we can all indulge in what some people call a race to the bottom on price and just try and sell. Oh, look, I'm cheaper than the next guy if you want to wire some money abroad. That's not what we're about. We're about a complete service aided by, speaking to real people, but also the complexity of the underlying stuff that we can do, but make it simple for the customer, means that customers like what it is that we have to offer. The equal spend platform, we still don't have really meaningful international travel, but that's setting record highs. Same thing in that, the platform is good, solves a problem. It's actually, in that case, free to use. So I think that's what's doing it really, Paul, is, we're getting our sales message better and clearer, not just, I can do it cheaper, but more about these are the various things that we can do for you, which must be a problem for your company. So, and do it simply. So it's a combination of digital marketing, people on the phones, it's starting to gel. The CRM investment into the system called HubSpot is paying off. It just, compare and contrast to last year, it just feels, exciting, if I'm honest.
Yeah. Well, I mean, your forward contract side is absolutely flying, isn't it? I mean, it seems to be that more sophisticated customer wants bespoke Forex type of arrangements rather than standard futures.
Be they importers or exporters, the forward contracts and futures contracts originally started up in the US, with big farms, wanting to sell their corn forward rather than today. That's how it all started, all this type of stuff. All derivatives basically started there, believe it or not. And so, importer and exporter with some currency volatility wants to know that they can buy or sell euros 6 months out. That's solving a problem for them, giving them certainty.
Yeah, well, that's absolutely brilliant. What about the sort of the consumer and the travel side? I mean, I did notice that sort of like at the second half of 2019, you kindly split this out. You did over 4 million of revenue, and even though you've hit a record level in Q2, you only did 0.4. So effectively, you've still got, if I just do the maths right, just if you compare it to the second half of 2019, another 3.5 million to come in the potentially to come back at some point.
Yeah, it's as we allude to in the statement, it's like a free option. We've hit a record quarter, whereas it's pretty much a record, on the bad side on travel money, because there just isn't any volume there. It is picking up slowly. We have the product there. It works. It's great. It's not costing us a fortune to keep the capability. So that'll kick in, to do a record quarter despite that, I think is phenomenal. And it does speak volumes for where the business could go if that just kicks in, which one presumes at some stage it will. I mean, as always, I'm always cautious, and we allude there, on the EBITDA level, that we're not prepared to go like, this means we're going to have an amazing year. It feels like we can, but let's see where it takes us. Plus, we're keen, because we're got this growth momentum now, to keep it up or accelerate it. So to the extent that we're generating cash, we're reinvesting it in going a bit faster. As I said a few times, I feel like we have an opportunity in this B2B arena where we've repositioned ourselves over the last few years, and I don't want to miss it for lack of ambition or
I totally agree. Well, just on that ambition then, I mean, you did, as you say, I think it was 8.7 million turnover in Q2 on almost a record low of low travel of 0.4. If the travel comes back and B2B still, is it feasible in the next 12 months we could hit a 10 million pound revenue quarter at some point in time? I mean, this is not a projection, but it's just, is it possible?
You're always trying to get me to make forecasts, aren't you? But I mean, clearly it's possible. If we did 8.7 with very little travel money, and could we do 1.3 million extra travel money in a quarter? Yes, but that's outside of our control. I think the great thing for investors is, with that revenue stream removed, or all but removed in the short term, we're in a really robust position. So the business is great without it, and with it could be
even better.
Phenomenal. I mean, suffice to say, the second quarter was revenue-wise above our expectations, but our expectations had a chunk of travel money in, because we thought we'd be more open by now when we did the budget, in November last year.
Yeah, well, I'm looking forward to next year, that's for sure, because there's absolutely colossal pent-up demand for people and holiday.
I decided to take it on the chin, go away for 2 weeks, and do my 5 to 8 days penance back in the UK, because we can all work from home, better than we could before. So it's not the end of the world.
Yeah, just on that sort of cost base, I did see you sort of like the headcount now even dropped from April. So it's sort of 250. I mean, when you mentioned that you investing back in the business, I'm guessing it's a bit of a sort of a Jeff Bezos type of principle with Amazon, that it could turn on handsome profits if it decided not to grow. But essentially what you're doing is you're controlling your discretionary spend as tightly as you can, but you're investing for growth, and that's in new products, it's in, you know, sort of like new sales, etc. Because you see that opportunity. Is that how investors should think about it?
Yeah, and you know, headcount is a clumsy proxy for cost in some ways, but nevertheless a reasonable place to start. But we're kind of reinvigorating. You know, hopefully people have seen on Capital Markets Day. You know, we have some young, talented people here. And
you're not very old yourself, Ian.
I'm older than I look, I believe. But, so there's been, which ultimately, you know, if you have the same headcount and you're getting younger, brighter, you know, more energetic people, and that'll reduce the monthly cost, if you see what I mean, because you sort of
And you moved to Chester as well, haven't you? You've done
yeah. As and when roles come up, if we can fill them in Chester rather than London, then we do.
Yeah.
And there is there's a well-educated, ambitious talent pool up in the northwest. You know, Londoners tend to think that the world revolves around London, but it really doesn't. So yeah, it's fantastic to have that office up there.
Yeah, and what sort of new products, new developments are you? I did see you're investing also in a bit of sort of compliance and extra audit to effectively give you more differentiation versus the competition, I guess, as well.
Yeah, you know, I think we should never underestimate the complexity on the compliance side of what it is that we do, and also that the FCA, particularly since Wirecard, you know, last year, which was about a year ago, would you believe, are very hot on the topic or on the sector. So we view this as a competitive advantage. If you do compliance well, you invest in it, then we can, you know, solve problems for companies that maybe others can't. So we're all over it. Nevertheless, you know, with 4 FCA regulated subsidiaries, the FCA will typically ask you to perform audits on all of them at your expense. You know, it gets expensive. There's a burden there, but rather than viewing it as an overhead, as I say, we view it as an area where we can actually outperform our competitors, and it may put smaller competitors out of business, which is not a bad thing, because we can, you know, either put them on a white label platform or acquire them.
Yeah. And what is the sort of the M&A side? Because you did obviously buy Effective Excess very, I think it was like last year, wasn't it? Sort of almost 12 months ago.
Yeah, I mean, there's a few out there. We've been very cautious last year, particularly. You know, most of these deals generally had some upfront cash. Still not really feeling that I want to necessarily take cash off the balance sheet to use for that. Whereas, you know, the other side of, as you grow, and we're growing fast, then typically you have to collateralize various providers, you know, liquidity providers, etc. So keeping a powder keg of cash is no bad thing, but you know, as we move forwards, we're likely to grow that. If anything, I'd have thought, you know, we're in a good position there. So I have I'd be surprised if we didn't do at least one
some bolt-on or something like that. I mean, the thing is, though, I guess, is to say your marginal pound of investment going organically is generating such a high return that it's sort of like your opportunity cost. Where'd you put your, you know, where'd you put your chips as much as anything? Because
and we allude in the statement how well the Casco acquisition did, and you know, suffice to say that every acquisition we've done, principles of those businesses, their businesses have done better once put into us, because, you know, there's more things they can offer to their client base. So it's not like someone selling their business to us, that's just it. Ideally, you know, it's better for them because they can extract more out of the asset themselves, you know, on earn-out agreements, etc. So it can be a win-win, which you don't always get in business.
Yeah, and then just on the sort of the rest for the rest of the year in 2000, I understand you've decided you say taking a very cautious in terms of EBITDA, which I can understand. But I mean, I've done the obviously I've got, I think it is for sales for the full year 33.4, which is really just exactly the same as H1 currently, which is very prudent. I don't intend to increase it. I'm just going to keep it the same until the interims, along with my EBITDA of 4.2, clean EBITDA of 4.2 million. So I'm just going to hold those. But as I say, you must be starting to feel very confident, particularly on the top line, because I mean it's assuming there's no sequential growth first half to second half.
Yeah, yes. The short answer is yes, Paul,
yes.
But you know, as you say, the interims will be in September. We'll have a bit more line of sight then, won't we, of how this quarter's going. You know, we're 7 days in, it's going well, but you know, things can change, and you know, I don't expect to change our forecast on like the 30th of December.
Yeah, okay.
So you know, we have to start. You know, if we're seeing that consistency of performance, you know, by the time of the interims, then you know, it may be appropriate to change them. But right now, I'd rather be proud of what we did in the first 6 months. Super proud of what we did. Really, really optimistic for what we have to offer, you know, as we're going forwards. But I'd rather bank it.
Yeah. I mean, I'd point investors also just look at the valuation. The shares are currently at 47p, trade on 2.3 times EV sales, and that's on my modest levels of revenues, just copying and just duplicating first half with second half, compared to the sector for e-payments and fintech on over 8 times sales. I mean, my valuation is a minimum 70p. So there's plenty of upside, and that's still.
Yeah, it does seem that the market's still punishing us a little for, you know, for missing our numbers in 2019, and I think we've done enough to show that, you know, that's all changed. And as you know, going back to the beginning, we've done this despite, you know, virtually zero travel money revenues.
Yeah, well, I mean, I think as a summary for investors, I mean, you say you've got strong like-for-like revenues. You've bagged a whole bunch of thousands of new clients. You're investing that into growth, into new products, and you've got a potential travel upside in terms of that whole optionality alongside the tight cost controls. That says to me is that you've got an increasing sales line, a controlled, you know, sort of like a cost base. You're going to get eventually you're going to get improving profits as well. So anyway, big congrats, Ian, and many thanks for your time. And sorry to disturb you on your holiday, but given the excellent results, I thought I had to sort of like
no. And as you know, Paul, anytime, you know, if I'm awake, I'm happy to speak, and hopefully, you know, we get a chance to speak again in September, and we'll have, as I say, a bit more clarity about how the third quarter's going. So we can
well, au revoir until then. Have a great holiday. Thank you, Ian.
Cheers. Thank you.